Hey everyone, Paul here, and Airbnb is planning to go public in December 2020, and there is a lot of buzz about this stock. So I wanted to do a deeper dive into the valuation and some of the facts about this company. So here we have just a quick overview of some of the headlines. So this is something, Jim Cramer's really bullish on this stock. He's saying that he wants to be a buyer. Barron's had an article out talking about why you need to be a buyer of this stock. Of course, I say that you got to be sure that you're doing your own research and making sure that's fitting your portfolio. Of course, always keeping that in mind. We even have an article here from the Wall Street Journal where we're talking about the benefits of going public and what Airbnb is going to be able to do with these funds. So for Airbnb, they're going to be able to use this capital for investments, acquisitions, as well as paying off some of the debt that they had to use to get through the shutdowns of 2020, which negatively impacted their business, even though they ended up proving to be pretty resilient overall. And that, by the way, was one of the factors that led to a delay in their IPO. They wanted to go public earlier this year. It was pushed back due to some COVID-related issues. So when we look at this, and I want to get into the details of this, but I want to just kind of show a quick overview. So when we look at this, we can take a look at the valuation based on a couple different metrics here. So I'm going to be looking at this saying, okay, what price to sales multiple is the market ultimately going to put on this stock? And what is their market share for their addressable market? So what Airbnb, they provided some facts that said, hey, this is how big we believe our market is. And so with that in mind, they really have about 2.5%, somewhere in that range, of the available market. So that's really their market share. So, when you think about it, that's pretty small relative to the growth that they could have. It's certainly with the benefit of having these funds to be able to grow even faster, of course. But so I'm looking at it from a 2.5% market share to 5% market share to 7.5%, and at the upper end of this range, I'm looking at a 10% market share. And then from there, I'm saying, okay, well, what if the revenue at these market share levels was valued at 3 times sales, 4 times sales, and 5 times sales? So we got the blue, orange, and gray respectively, indicating those different price to sales multiples. And on the lowest end, you could say, okay, having their current market share only valued at 3 times sales would say, okay, they'd probably be worth about $23, $24 a share. So it's all the way on the kind of the most bearish scenario. The most bullish scenario that says that, hey, if they're able to achieve a 10% market share for their addressable market, and they're valued at 5 times sales, so kind of at the upper end that we're looking at here, they could be worth over $150 a share. Now, I'll get more into, kind of what is behind the scenes kind of calculating these, but just wanted to kind of show that quick valuation there. What I also want to get into, and again, I'll deeper dive into this, but I want to do a deeper dive into the cash flow analysis as well. So certainly with growth companies like Airbnb, I think price to sales can make more sense. But what is encouraging about Airbnb is that they actually are generating historically positive free cash flow, which is, a really good sign for a company like this. Because again, a lot of times, you have really high growth companies that are burning cash. So the fact that, again, they have historically been in a positive free cash flow situation bodes really well for their future. But what I can do with this scenario is you can start forecasting out what their free cash flow per share could potentially grow by. And then you can just discount that back because, in finance and with valuation, we have to always be discounting things back to today's dollars, not future dollars. And all that really means is that, hey, if you're able to earn $3.74 in 2029, that's really not worth $3.74 because you have to wait 9 years to actually get those funds. So when you discount it back, you'd be able to say, okay, that's only worth, at a 10% discount, $1.59 in today's terms. Okay, so again, we'll get more into depth on that, but I think that one of the scenarios I'm looking at would say that just based on some assumptions around their free cash flow, that they'd be worth about $70 a share. Okay. And then start it all back with just, the main facts of this IPO. Okay, so we come back over here. So I had a little motivation about some deeper things to come. But when we look at their IPO, first of all, they are planning on going live with a symbol ABNB. I feel like, that makes perfect sense for a company like Airbnb to pick that symbol. They are planning on selling 50 million shares. Now, the founders are kicking in I think a couple million shares as well. They will be retaining about 43% of the voting power for this company. So they still have a sizable stake in the company. But again, there's going to be that 50 million shares sold by Airbnb. And when we look at it, so as a total company, because it's not just the shares that are being sold and purchased by new investors with this IPO, you have to look at it holistically and understanding how many shares are available for this company in total. And the total number of shares for them is going to be about a little over 600 million shares outstanding. And with the share range right now, they're really kind of giving kind of some guidance between $44 to $50 per share. That's really the expectations about where this is going to be trading at. And so if we look at it, we can say, okay, well, how much money is that going to raise them when you look at the 50 million shares in the IPO and you look at these kind of different ranges here? So the company would really be able to kind of generate an extra about $2.2 to $2.5 billion of capital as a result of this IPO. And that's another thing to kind of really keep in mind with IPOs, by the way, because if hypothetically Airbnb prices their IPO at $50, so if it does price at the higher end of the range and they're able to get 2.5 billion, well, let's say that the very first day of trading that the share price spikes from $50 all the way up to 100. Okay, well, that would, in a sense, really mean that that's $2.5 billion that Airbnb left on the table that other investors or speculators were able to capture as opposed to Airbnb, and that's always the really fine line when you're determining what price to have your IPO set at, because you don't want to have it set so high that you're pricing people out of the market or people aren't buying all of the shares, but you also don't want to have a price so low that you again are leaving a lot of money on the table. So that's always the fine line that you're walking with these IPOs. It certainly made it a little bit more difficult with kind of some of the volatile market that we've been experiencing in 2020. And we take a look at the total share value. So I mean, this would basically put the company's equity value in total somewhere between 26 to 30 billion dollars. And when we look at that on a price to sales or price to revenue multiple, that's somewhere between 5 to 6 times sales when you look at how they've done relative to 2019. So that's on a backwards basis. Certainly, if you expect sales to kind of get over the 2020 downturn and start to grow, their price of sales on a forward basis would even be more attractive than that 5 to 6 range. Then we come down here, we take a look at their gross booking. So this is important to kind of keep in mind. So when you look at a company like Airbnb, their revenue isn't based on the gross booking, because with the gross booking, of course, that's just saying the total value of everybody who has actually booked a night with Airbnb. Now, a lot of that money, and the majority of that money, is actually going to be flowing to the actual hosts, but Airbnb is going to be able to keep a percent of that as a fee. And so the percent that Airbnb is able to keep as a fee is a cost to the host, but it's revenue for Airbnb. And so from 2018 to 2019, the revenue that they were able to keep as their fee was 3.7 billion, and then it was 4.8 billion. So there was growth both in their gross booking and their revenue by about 30% for both. Their revenue grew a little bit faster, which is a better sign for what they're able to kind of have with their margins. But then we also look at their operating cash flow. Now, their operating cash flow and their free cash flow were both positive in 2018 and both positive in 2019. It did go backwards for them in 2019. A big reason for that was just investing in the business. So they're investing in their growth. I don't think you can really knock a company for saying that they do want to make those investments. And in fact, that's also, as we kind of discussed earlier, I think part of the benefit of them going public is they're going to be able to use these funds to further invest in their growth. But one of the notable things here was to say, okay, in 2018, they had free cash flow per share. So if you look at the free cash flow of that they were able to generate of the nearly $505 million dollars. You look at how many shares they have, a little over 600 million. Well, that works out where they were able to generate about 84 cents per share. And I'm gonna use that free cash flow as a starting point when I start modeling out free cash flow, like we were starting to walk through earlier. And then, when we look at the performance with 2020 and as it relates to the performance in 2019, so through September 30th, so in 2020, their revenue and gross bookings were both down by more than 30%. Of course, that was really driven by COVID. So this was doing well. It was a growing business. Then of course COVID struck, and really kind of shut down a lot of travel. But it did rebound fairly quickly. So there was again some resiliency shown there, and ultimately I think what's happening is that Airbnb is now kind of almost becoming a net winner, I think, when you start looking at the next few years of COVID, because, as people are still going to be concerned about, the virus and things of that nature, Airbnb is going to allow them a way to travel with, avoiding, busy hotel lobbies, having a more personalized setting. So I think that, that's something that, again, I think long term, I think Airbnb in some ways has been benefited from the events of 2020, but we will ultimately see how that plays out. And then another thing to keep in mind is just that their total operating cash flow, so they actually have been able to generate from 2011 to 2019 $1 billion in operating cash flow, and they were able to keep free cash flow of over $500 million. Okay, so now let's get into some facts about Airbnb. So these are some things that kind of stood out to me. So when you look at their total hosts, they've got about 4 million hosts currently. They're currently in about 100,000 cities. This was kind of surprising to me that most of their hosts are actually outside of the U.S. So hosts in the United States only actually account for about 14% of those hosts. This stat right here, looking at their organic host acquisition, their organic customer acquisition, these are some statistics that really jump out to me and really make this a really, really attractive business model. And that is to say, they don't have to spend a ton on marketing to be able to get new customers to come to Airbnb. I think they're in the really beneficial and enviable position where if somebody wants to go on a trip, they're thinking about Airbnb because of word of mouth, because they're already aware of it and they're actively seeking it out, not necessarily being marketed to. And so whenever you're able to get that organic customer reach, I mean, it makes your business a lot more scalable. I mean, it makes it a lot more profitable with all the money you get to save on marketing and things of that nature. And I would contrast that with DraftKings. So DraftKings, another high growth company, they've had to spend a lot more on marketing to be able to get those next customers, whereas Airbnb doesn't have to spend to that level. And again, from the same thing with a host acquisition, I think that you're seeing a lot of people wanting to come up with ways to generate some extra cash. So if they're able to rent out a room in a home, or if they're able to find a way to either rent out the whole unit, rent out a room, like people are looking for those ways to generate some extra cash, and Airbnb offers that to them. And this is some 2019 information here. So we look at their active bookers. They had 54 million active bookers. Total nights booked were 327 million. So when you look at that, average nights booked per person or per active booker, it's a little over 6 nights that your average user for Airbnb is booking per year. So that's certainly pretty strong. And now what I want to do here, so this is kind of the numbers behind the scenes for that valuation based on the price of sales and based on the serviceable addressable market. So what I want to do here is just kind of walk through a little bit more about this, but the total numbers, so not just the per share, but if we look at what they could be able to achieve in terms of their market cap based on their market share and based on their price to sales. And by the way, because all that's really saying is if you understand what a company earns in revenue. So in simplistic terms, we can think about what if there's a company that makes $3 million in sales, okay, and they're priced at 1 time sales. Oh, okay, well, they'd be trading at about $3 million. And if they had 3 million shares outstanding, you would say, okay, they're trading at $1. Like that would be their value, because you would look at, okay, how much is the market willing to pay for them? How many shares do they have? And you're able to kind of back into the price per share doing that. So what I'm saying here is if they had 2.5% of the market that they've identified, and the market was willing to pay 3 times the sales, okay, then that would leave them with a market cap of over $14 billion. Now, on the upper end of this, we could say, well, what if they were able to achieve a 10% share of the market, and they were able to achieve that at 5 times sales? Well, what would they be then? Well, then they'd be worth over $90 billion. And I think what this range does, and what I think walking through kind of some of these fundamentals can help you start to think about not what you think the share price could be, but thinking about how the company could perform, and then based on that performance, what the share price could be. So really, I'm really trying to emphasize having the fundamentals be the forefront of how you're making your investment decisions, because I think it's so tempting if you're looking at buying Airbnb stock at like $60, $50, whatever that might be, and you're like, hey, I'm buying this at 50 because like, oh man, I want to get this to 100. I'm going to double my money. And you're like, okay, but what would it take to double? And I also understand, like in the short term, things don't always move based on the fundamentals, but in the long term, the good news is they generally do. So that's something that eventually I think it will kind of catch up. In the next 5-10 years, you will see this trading more at the fair value than you would at the next, couple months. Okay. But when I'm looking at this, I feel like I would definitely say I understand what the high growth potential that Airbnb has. I would, be fully comfortable saying that I'm going to value this at the upper end of the price to sales multiple. And I feel like by looking at it, I don't think it's completely unrealistic to say that they'd be able to double their market share, within the next, few years, 5 years, whatever that time frame might be. If they were able to get to 5% of their serviceable, addressable market, the SAM that we see here, and they're trading at 5 times their sales, then they would be close to $80 a share. Okay, so what that does is that again helps put that in perspective for me to understand some of the metrics that they'd have to hit to be able to get to that share price. But I think that, and by the way, so we look at that $78. I think it's interesting to kind of think about that number. Some of the valuation based on their cash flow. So the other valuation technique being based strictly, what are their sales going to be? What are investors willing to pay for those sales? Basing the sales on their market share. This is looking at, okay, well, what has their free cash flow been? Well, since 2011, they've earned about 86 cents per share. And then most recently in 2018, they were able to kind of earn that just in 1 year. So I start to say, okay, what if with this additional capital, what if the growth of their market allows them to, by 2021, get to $1.03 of free cash flow, and then they start growing at double digits. So let's say they grow at 20% all the way through 2025, and then they grow at 15%. And let's say they grow at 15%, all the way through 2040, and then they really kind of just level off. So let's say at that point they just start growing by 3% for the life of their company. Well, if they do that and you discount them by 10%, they'd be worth about $72. And by the way, part of that motivation when I look at their cash flow growth, I go back and I took a look at Facebook and how they performed after their IPO. And, Facebook, another really successful IPO, obviously, and, they were able to grow their cash flow by, really high double-digit amounts. So I don't think it's entirely impossible to say that a company like this, could have a long runway for some of these high free cash flow growth rates. So that was part of the motivation for looking at some of these numbers. But when I see this and I see about $72, when I take a look again and I think about this 5% market share, and I think about maybe being trading at the 5 times multiple being about 78. This to me says, hey, I would feel pretty good about owning this stock for about $70 to $80 a share. And what do I do with that information? Well, I think what's really good to do is not necessarily chase this. So if this opens up and it does double, let's say it prices at 50 for their IPO, and then first trading day it goes nuts and it goes to 100, which, I mean, I'll be honest, I mean, like, I think it's entirely possible, right? I mean, like, this is a stock I think that is going to have a lot of publicity. I think there's going to be a lot of demand for it. This is going to be highly discussed, highly talked about, and so I think that this is something that certainly could pop to a pretty high amount on the first trading day. But I think something to keep in mind is what happened to Facebook. I mean, Facebook had a lot of publicity with their IPO back in 2012, but within the first 6 months of Facebook having their IPO, they lost 50% of their share price. And there kind of came a point where people were like a little bit more pessimistic about Facebook. And so why do I say that? I say that because, well, if this is a stock that does pop, and let's say it goes to $90, and that 6 months later, whatever time frame it goes, to, Airbnb pulls back to start trading at $40, $45 a share. Well, if that happens, and all of a sudden I know, hey, I really kind of like this a lot to think it's worth about 75. If I'm able to get it at 45 or 50, I'm able to say, hey, I can really be confident that I want to pull the trigger at that price based on this analysis. So I think it's good to understand the value, even if the value is going to be a lot higher today, because in the event of a pullback, at least that starts to put things in context for you to say, well, at what price would this be a good investment? Because, for a lot of stocks out there, there is a price at a point where an investment becomes, an attractive thing to put your money into. So love to know what you guys think about this analysis, what you think about Airbnb. Is this something you're going to be, buying this? Or are you going to be waiting for it at a certain price? Like, what do you think they're going to be able to achieve with their market share? Would love to know what you guys think. So let me know in the comments below, and I will see you next video.